morning to all our valued customers. We welcome you to another edition of our weekly market review, and we also appreciate you for your loyalty and continued patronage over the years. So I appreciate you, and we want to tell you that we appreciate if you can tell us in the area we have done better and tell others about all our products and where we also need to improve upon. Please also tell us. Thank you very much. So we'll be starting the review again this morning, and we'll be examining what actually transpired in our equities market last week. If you look at the equities market performance last week, it was also down by a negative 2.71%, and then last week happens to be the fifth week equities market will be on a downward trend. The all-share index lost 2.17%, and then it closed 99,539.75 basis points from the previous week closure of 102,314.56 basis points. And that actually moderated our year-to-date return that used to be around 40% to 33.12%, almost is even below the current inflation trend. So in terms of activities during last week transaction, we observed in the market that a total turnover of volume worth 1.595 billion units of shares were traded. And in terms of value, that valued at 32.31 billion naira. And then if you observe that or you compare that to what actually transpired in the previous week, it was higher because the previous week transactions in terms of units stood at 1.13 billion and the value was 28.65 billion. So market volumes in the last week transaction were majorly driven by five high volume traded stock in Access Bank, United Bank for Africa, GTB, Zenith Bank. And if you look at the four companies in terms of contributions, the four companies contributed 35.69% in terms of value to the total transaction that took place. And then they also contributed 43.57% in terms of the turnover of the transaction in our equities market. But as I have said, the all-share index declined by 2.71%, and that actually also reduced the value of our market capitalization to 56.29 trillion. That also make the market breadth. We also close positive negative from 0.2%, negative 0.2% to negative 0.60% on Friday at the close of the market. Go to the next slide, please. So looking at the sectoral performance, as I've said, financial sector still dominated activities and equities market. Financial service sector transaction recorded 72%, conglomerate 7%, oil and gas 6%, and others 15%. Also looking at the sectoral performance under various indices under our coverage, we observed that the banking indices contracted by 11.46% week on week. Insurance also contracted by minus 2.8%. Consumer 0.96%. Industrial minus 2.7%. Oil and gas closed flat. And if you ask me reasons why all the indices also closed negative, that could be traced to the profit taking that has been taking place in the equities market. Don't also forget that the Central Bank of Nigeria Monetary Authority, they've been very aggressive in curbing inflation and moderating foreign exchange market, bringing stability to the foreign exchange market. So we've seen various yield, federal government bonds, and we've seen treasury bills bringing high interest rates. So investors are actually moving funds to those segments of the equities, bond market and fixed income market. Not that the equities market is still not strong. Not that the company results we have seen from all the companies that have been released are not very impressive. We've seen Zenith Bank declaring 350 kobo and other companies that are listed in the market. But the objective of every investor is to ensure that they maximize their return. So we are seeing some movement from the equities market to the fixed income market and the money market, which is the reason why the equity market has been depreciating, why some rational investors are also using the opportunity to take position in some of the companies with that very strong fundamentals. So in terms of total stock that appreciated, 13 stock appreciated, 62 also depreciated. That shows that these are the things why market rate also depreciated or contracted week on week for the last week trading section. So we've talked about the inflation. Inflation is also affecting the market. Inflation is currently 3.20%, almost mirroring what the equities market return is, year-to-date return is also trending. But if you look at the results that have come into the market in our equities market, some companies markdown haven't taken place. So you are likely to see investors using that opportunity. But at a point like this, at a time like this, when equities market is depreciating, we don't encourage all our valued customers to start doing panic selling. It is important that you look at the valuation around the company. So it is not only peculiar to Nigeria. If you see the global market as well, there have been moderation in the global market as well, because other countries of the world, they are also having their own price of inflation. Inflation is a general problem across the world. So inflation usually erodes investors' capital. So that's why people always want to move their fund from where they think they can reduce their return. They can get a better return and real rate of return. So that's why we are seeing fund movements. So by the time we do another webinar, we're going to dwell more on various sectors and opportunities that are also available across various markets and even in the equities market. So we are also updating you that the monetary policy rates is still, all those parameters are still intact. We are also waiting for the central bank next month to also meet again. That will also determine what will be the directions of the market. So, but as at last week, we've seen figure for inflation. And then if you also see the performance of some of those companies, company by company, some companies have also done better than what the inflation is currently trading. So next slide. So this is just, we have also updated our slide for analyzed dividend and capital gain. Our recommendation has been sent out this morning. You can look at those recommendations. So for our Access Bank, we are maintaining the old position on our Access Bank. Access Bank has been marked down for dividends. So our valuation still remains 13 naira. And GTB, we are also maintaining old on GTB. It closed 33.50 kobo on Friday. It has not been adjusted for the dividends. So they are still paying 270 kobo. If you look at the analyzed dividend use, that's over 24.31%. The Stanbic IBTs we're also maintaining hold. UBA we're also maintaining buy. UBA declared 2.30 kobo. It has not been adjusted for the markdown. So that is likely to take place maybe probably next week. But for the Zenith Bank, it's taking place this week. Zenith Bank has not been adjusted as well. We are placing buy on Zenith Bank. If you look at the analyzed dividend yields on Zenith Bank, that's 29.74%. And the dividend yields, that gives almost 9.89%. Flamil, we are also maintaining our old position. UAC, we are maintaining a buy on UAC, is under a conglomerate. West African Portland Cement, if you've seen the kind of expansion in the industrial segment, we're also maintaining buy. Okomo Oil, we're also maintaining buy. Okomo Oil has also declared 14 naira dividends. Analyzed dividend is at almost 17.10%. And Mayer and Baker, we're also maintaining our buy recommendation. Mansard Insurance, we're maintaining our buy recommendation. We're expecting their results, their final year dividends to be out. Consumer Insurance, we're also maintaining our buy recommendation. Total Energy PLC, we're also maintaining our buy recommendations. So they have also declared 25 naira, and it has not been marked down. If you also look at this slide, it's talking about the 5 years history of selected securities. We have already projected this before the declaration of some of the companies. Access Bank has been marked down. We projected 1.30 kobo, eventually they declare 1.80 kobo. African Prudentials as well. We are expecting Custodian and Master Insurance. All other companies that are in green color, they have declared their dividends, and they are in line with our projection for the final year dividends. So we are expecting Master Insurance and Custodian result to be out, and we are projecting 30 kobo for Master Insurance, and we're also projecting 50 kobo for the Custodian Insurance. So these two companies that have also been part of our buy recommendation, and they are also insurance sector of our market. So in terms of corporate action for the week, Fidelity Bank has declared its 60 naira 60 kobo final dividends, and the qualification is 20th of April. The payment is 15. If you look at the previous slide, we projected that they are going to pay 50 kobo, but eventually they paid 60 kobo. That's almost 10%, almost 10 kobo difference. That's also very good. Unilever has also declared 75 kobo. Is also under conglomerates. The closure day is 20th of April as well, and then the payment day is 10th of May. Transcorp Power has also declared 13 kobo. It has not been marked down. Okay, I think it has been marked down. Wema Bank has also declared 50 kobo. It has not been marked down. You can also take position. Miller and Baker has not been marked down. And then Industrial and Medical Gases of Nigeria used to be BOC Gases have also declared 50 kobo. It has not been marked down. We all have their various registrars. So in terms of if you're having any issue with any of this company, so you can scroll up. We are still maintaining. These are the whole dividend declaration. So with the first slide is the updated one, talking about those who have also declared their dividends for the week ended 19th of April. Next slide. So looking at the expectations for the week, I have said equities market has been on the downward trend in the last 5 weeks. What are we expecting this week? The peers will still maintain hold in equities market due to the fresh release of inflation, because every rational investors are particular about real rate of return. That is a return that is discounted of inflation. So you are likely to see people also moving from to other segments of the market in terms of the elevated yields that we have seen in fixed income and in money market. We expect to see peers maintaining position in the market, and we expect to see high volume trading in some banking stock under Fugaz. The likes of GTB, Zenith Bank, and UPE, they have not been adjusted for the dividends. If you see what happened last week, they are high volume traded stock. So some similar trend is going to play out this week. And we also expect to see positions taken in low capitalized stock insurance, ICO, Cornerstone, Royal Exchange Assurance, and a few others. And this is the time investors also want to take advantage of those low prices in those middle capitalized or low capitalized stock. Market will continue to react to the negative, to the elevated yields in the money and fixed income market. You are likely to see fund movement. And then, especially we've seen Treasury commercial paper and federal government bonds coming out with high yields. That's also affecting the equities market. And then finally, markets will close on negative note week on week, but it's going to be at a slower pace. When you look at what you have seen in the last 5 weeks, it's going to be at a slower pace, except there's a kind of strong catalyst in the market. We are also expecting to see minimal impact of the FAC allocation. That's the Federation Account Allocation Committee. So that's for the month of March, about almost 1.1 trillion. We expect that to create liquidity. So finally, we want to be telling all our value customers, equities market is downward trend. It also gives an opportunity for you to take position. There's no cause to do panic sell. So if you want to sell or offload any position in any of your company, any of the listed security, please reach out to us. We'll advise you. So at a time like this, market will always be asked to do elevated use we have seen in the morning and fixed income market. So my colleagues will be taking us through the fixed income market, and thereafter we'll move to the question and answer section of our morning section. Good morning. Thank you, everyone.
Okay, good morning, everyone, and thanks for joining once again. So quickly, we'll look at the activities in the fixed income space for last week. In line with our expectations, we saw the funding rates remain elevated. Last week, we had projected that this would be the case. That was on the back of the federal government bond auction settlement, which took place last week. And that was the case. We saw that the rates on the open buyback remained elevated at 29.39, while for the overnight rates, 30.25. We expect to see a moderation this week on the back of the FAC allocation that was disbursed last week. Although the system is currently in the negative zone, so I think about 1.1 trillion, like my colleague has said, was disbursed, and about 700 billion hit the system last week. So on Friday, so we expect that to water down the illiquidity in the market, and we should see an improvement in the funding rates. Quickly, the Treasury bills market, due to the liquidity in the market last week, you saw a number of sell-offs, holders or investors in the markets, most especially the financial institutions. They had to put up their holdings for sales to raise liquidity and we saw that playouts that led the market to close on a bearish note. So at the end of the week, we saw that rates advanced by a whopping 632 basis points. That's about 6.32%, from 18% levels to 25.18. We should see a slight moderation in that this week. Like I said earlier, the FAC allocation should water down the liquidity in the system. So we should see rates in the treasury bill space, moderate on the bullish notes slightly this week. Promo segment also closed bearish. A number of holders in the market also put up their assets for sales, and that led to the market closing by at 18.44%, which was about a 25 basis point decline on average. Last week Monday, there was an FGN bond auction where 450 billion worth of bond was on offer. Total subscription at the end of the auction was about 920 billion, and the CBN sold a total of 626.82 billion worth of bond. At the auction, April 2029 was a fresh bond that came into the market for the first time, and we saw that rates on that end, we saw it close at 19.3. Can I remember someone asked this question last week? That was our expectation for the auction, and we had projected a 19% band, which was clearly what took place at the auction last week. On the 31s and the 34s, we saw that rates declined at that level. This further buttresses the points we've been trying to make. We are beginning to see a moderation in rates. We saw that at the last OMO auction. We saw that at the last Treasury bills auction. Now the bond auction as well. On the 2031, rates declined by 25 basis points, and on the 2034, rates declined by 45 basis points. What this simply tells us is that now is the best time to key into the market. We're beginning to see a moderation in rates, and any rational investor, what they want is to invest or to key their investment at the time where rates or yields are elevated, not to take an advantage of that and make the most on their investments. So now that we're beginning to see a slight moderation, it's just a call on everyone to key in their investments as early as possible. My colleague has said it. We've seen a number of movements from the equity space to the fixed income space. And why that was an aggressive for weeks is that people understand that rates are beginning to come down. So they're trying to just lock in their funds, take advantage of those high rates and high yields before they eventually decline. So we might see a continuation of that this week, where a number of people will still have to liquidate their equities holdings to take advantage of this elevated yields. So next slide, please. Next slide. So for the bonds market, at the start of the week, the market was very quiet in anticipation of the auction results. And then after the auction, we saw that a number of people, I think I reported earlier that 920 billion was subscribed, but the CBN could not take the entire subscription. So we saw a number of those bids filter into the secondary markets as people tried to take up their lost bids at the auction at the secondary market. So we saw that improved demand on the back of the auction, where some people did not win their bids. So as a result of that, we saw that on the short end of the curve, rates significantly declined by 46 basis points, while at the mid to the long end of the curve, we saw a mild decline of 2 basis points. What this simply tells us is that a number of activities in the markets are geared towards the short end of the curve, and that's simply because the maturities at the auction, or the maturities currently being actively traded in the markets, the short-term maturities, like I showed, like we saw earlier, that the 2029, the 2031s, the 2034, that's within the band of 5 to 10 years. Those are where activities have been centered in recent times, which explains why we've seen more activities in that side of the market. So at that end of the market, in terms of maturities, like I said earlier, 2025, 2027, 2028, 2029, and then we saw some bit of activities around the 2050s. And on the 2050s, most of the activities on that end were sell-offs. So this is just a call on our investors, on our clients as well. We can't overemphasize the need to key in your investment at this point in time. Now rates are very elevated, and you don't have to lock in your funds for a long period of time. The short end of the curve, that's where the activities are taking place currently. So you can key into those aspects, locking your funds, advantage of the elevated rates. And the good thing about these kinds of investments are when you start going down, you can also see the market, take profits, and enjoy the dividend of your investment. You necessarily don't have to wait till maturities on those investments. And then at the end of the week, we saw that the bonds market declined by 19 basis points to close at 19.06%. Quickly, the foreign exchange market, we saw in the twist of events, we saw a reversal, or maybe not a reversal, but we saw an opposite of what we've witnessed for weeks, where the Naira at the official window declined by, or depreciated by 242 basis points to close at 1,169.99 Naira, 99 kobo. And on the fourth contract, we saw that the positive momentum was sustained, except for the 1-year contract where rates declined by 16%. There's this theory, or this conspiracy theory that's been going around, that whenever FAC allocation is displayed, we see that Naira seems to weaken. And it appears that theory is being sustained every single time we see FAC disbursement. And we believe that the government should be looking in this direction, because it seems when this money is released, a number of people try to take advantage of that to speculate against the Naira. But that's to tell us what happened in the foreign exchange market. And quickly, I think we should see a sustenance of that appreciation in Naira, because I think over the weekend we saw the Minister for Finance mentioned that they've been able to secure a $2.2 billion US dollars loan. When that comes into the market, that should further sustain our foreign exchange market. So what are our expectations for this week? What should our clients be looking out, or what should our clients be expecting this week? So very quickly, it's just that the market will still continue on a bearish note. System liquidity sustains or remains. So we expect that the people will still try to raise as much capital as possible, to meet their obligations. So quickly on our various products, you can get key into all these products. We have some fixed income products. We have the balance funds that comprises of both the equities and the fixed income space. If you're looking at taking advantage of the market at a low level, and then we have our dollar funds as well. For investors who have dollar inflows and are willing to and are looking at investing them, we have various products that can also that you can also take advantage of. So thank you so much for listening. If there are questions at this point, we'll be here to provide answers to them. Thank you. Okay, first questions. What do we think will impact? What do we think? Okay.
Okay. I think briefly, it's going to be very positive. I think it's talking about the GDP growth rate. The IMF has also reviewed our growth rates for 2024 to 3.3%. And then that decision was taken because they have seen actions from government in the area of physical and monetary, that just as we used to tell us that there should be a collaborative effort from those authorities. So we've seen improvements in the oil production. We have also seen that they have also removed electricity subsidies, even in the area of agriculture. So if you also seen that there's a kind of stability in foreign exchange market. So the IMF has seen this collaboration effort from those authorities that they are likely to impact on our GDP growth rates in the area of production. So what will be the impact on the capital market is that by the time that the strong activities across various sectors, capital market is going to benefit, especially if the problem of exchange rate can be resolved, or there's a stability. Those companies that are recording foreign exchange losses in their balance sheets, I think we are going to have less impact of foreign exchange losses in their balance sheet, and they'll be able to declare better profits. And then better profit means better dividends return to all investors. So that will make capital market more attractive for investors.
What is your outlook on the stock market for Q2 2024?
Okay, the stock market, we've seen what happened in Q1. Q1 was very positive. For now, the central bank is still raising money because inflation is still on the upward trend. until inflation continues to depreciate. Once inflation continues to depreciate and they are seeing the impact of those policy on inflation coming down, they are going to bring down the yield. When yields are coming down, and that will really have positive impact in the equities market or the capital market. But for now, the second quarter outlook may not be as robust or as positive as what we had in Q1. We'll continue to monitor those events. So that would be determined by the activity of the Federal Central Bank and monetary authorities.
Okay, for Access Bank and Wema Bank stocks, are they a good buy considering their current price levels?
Yes, they are a good buy. If you look at the Access Bank, we said it has been marked down, but we've always been working around the metrics of valuation. It's trading 17 naira, and the true value or the fair value of this bank is what? It's 30 naira. So if you are buying now, you are buying it a deep discount investment. So because over time, when there's moderation in the fixed income and foreign exchange market and the money market, the stock market will benefit and the price will go back to their original position.
Is MTN Securities still worth considering to buy? With lost revenue in 2023, do you still advise customers to buy?
No, for now, our MTN, we are placing MTN on hold. But for those who had bought at a price that is lower than the price that is currently trending, you can sell. But if you have bought around 210, 220, 230, we are placing it on hold. Though they've made a loss, but we are going to, that will be determined by the time you see their Q1 result, be able to give you appropriate advice whether to buy, because Q1 result will also give us what the company has in plan as to how they are going to navigate the foreign exchange losses they recorded in year 2023.
Okay, as the Naira continues to make strong gains against the USD, will that affect investments in the lead dollar funds? No, because the reason is very simple. We invested in dollars, not in Naira. So the dollars we invested, these are fixed income products, have a stable and a steady rate of return. So whatever is happening with your Naira at the time does not necessarily affect the return on your lead dollar investment, because those investments are strictly made in dollars. They are invested into fixed income products where your rates are can be predicted ahead of time. Now we have another question. What's the implication of the continuous borrowing of dollar loans by the FGN to sustain supply of dollars in the markets? If the revenue from oil exports is not stabilized, I think it's like kicking the can down the road. That's absolutely correct, sir, Mr. Bola. And we've always maintained this, that the major source of FX into the country is our oil revenue. A lot of work has to be done in that aspect of the market. As long as we continue to push the ball, shift the goalpost, we can only continue to move, but someday we'll get to a point where we can't move anymore. For how long can we continue to borrow? What about the repayment cost and all those things? So the best thing is for them to stabilize the revenue from the oil, from the oil, so from crude oil production and all, and they also have its and steady FX markets. Dangote Food, what is the inner information? What is the insider information? I believe investors expect a downturn due to the suspension of the merger. What else should we know?
Okay, thank you. As we have said, the news came out last week. They have suspended the merger. We are encouraging people not to do panic selling, because if you look at the two companies involved, the Dangote Sugar and Dangote Nascom, they are operating in the consumer sector of our market, and they are very good companies. In terms of competition, there's no threat of new entrants for those two companies. In terms of their product, there is market and there is high demand for their products, because those two products, sugar and the salt, they are perfectly inelastic. So we're encouraging you to stay action. Don't go and do panic selling. SEC has not come out to say that they have put an end to that merger and acquisition or to those corporate action. So, but because of the fact that Dangote Right is not an operational company, so the SEC, as the apex regulatory body in the capital market, they still need to do more work, and then thereafter they will come out. But that does not mean that they have put final suspension or close that transaction. So don't do panic selling, because if you do panic selling and later SEC now comes out to say, okay, they can proceed, you'll be on the losing side. So we advise you to stay action or to place hold on those two companies.
Okay, how does the open buyback rate works? So basically, those are the funding rates that are available to the commercial banks to take funds from their fellow counterparts in the market. So it's not really accessible or open to a regular investor. It's just a mechanism to control rates within the banking system. Next question. Nestle reported that FX losses is likely unrealized. Bottom line and top line seems good with FX loss driving losses. What is the investment thesis for this?
If the Netflix in our recommendation is we still place it on hold. Because just like what you have talking about the MTN, we are still looking at the Q1 result. The fact that a company has lost money or the recorded FX losses does not mean the company is not doing well. The same thing for banks. Why the consumer are gaining in the consumer sector, I mean, losing money, and the banks are also making money. So by the time we see the first quarter result of some of these companies, we'll be able to give appropriate advice. But what we are telling you that for now, we are placing Nestle on hold.
All right, thank you so much, everyone, for joining. I wish we have more time to take your questions. For those that were unable to answer your questions, please, you can send us an email, you can call our telephone lines, and we'll be more than happy to provide answers. At this point, to come to the end of this session, we thank you so much for your engagement. We thank you for attending, and we wish you a blessed and productive week ahead. Thank you.